Okay, let's unpack this. Imagine two absolute heavyweights, one that completely turned an industry upside down here in India, the other literally the biggest money manager on the planet,
Yeah.
deciding to team up and jump into a market that's, well, already growing like crazy.
hmm
That's the massive news we're diving into today. Jio and BlackRock are joining forces. They're entering the Indian mutual fund space.
It really is a fascinating partnership, isn't it? I mean, you remember Geo's history. Just think about telecom.
Oh, yeah.
They came in, made things like voice calls, SMS, basically free, completely changed the pricing game. Huge benefit for customers. Our
Yeah.
sources even call it disruptive, like clearing the road.
Totally. And now mutual funds.
Mm.
So our mission for this deep dive, and we're sticking strictly to the source material you shared, is to figure out what this joint venture, this JV, actually means.
Right.
We'll look at BlackRock's sheer scale, Geo's specific strengths, and their strategy, how they fit together.
Yeah, and that tech platform.
Yes. The technology involved this system called Aladdin. And crucially, what all this could potentially mean for you, whether you're already investing or just thinking about it.
Exactly. Let's dig into what the sources actually say.
All right, let's start with BlackRock. The sources call them the world's largest asset manager. What does that actually look like? What's the scale we're talking about here?
We're talking about numbers that are genuinely hard to wrap your head around. BlackRock manages $10 trillion globally.
$10 trillion.
That's their assets under management, AUM. Now, to put that into perspective, the sources point out India's entire GDP is around, what, $4 trillion?
Okay.
So BlackRock's global AUM is 2.5 times larger than the whole economic output of India.
Wow. 2.5 times India's GDP.
Yeah.
Just in assets they manage. And how does that stack up against the market they're actually entering here in India, the mutual fund market?
Well, if you convert that $10 trillion, it's roughly 85 lakh crore. Now, the entire Indian mutual fund industry, all the players combined, currently manage around 70 lakh crore in total AUM.
So BlackRock, just by themselves globally, manages more than the whole Indian industry put together.
Exactly. It's a giant stepping into the ring. And, the sources make it clear, like other foreign companies, they mention Alliance partnering with Bajaj, for instance.
Right.
BlackRock needed a strong Indian partner, someone local to, well, navigate the market and make the entry work.
Which brings us perfectly to that local partner, Jio. We know the disruption story, but what specific strengths is Jio bringing, according to the sources, that matter for this venture?
Well, beyond just that disruptive mindset, it's their distribution network. It's unparalleled across India. And here's something the sources really emphasize.
Okay.
Over 50% more than half of current systematic investment plan accounts, SIPs, where you invest regularly.
Yeah, monthly usually.
Exactly. Over half of those are coming from semi-urban and rural areas, Tier 2, Tier 3 cities, even smaller towns. They specifically mention places like Gonda, Gorakhpur, Bareilly driving this growth.
That's actually incredible. Over half of new regular investing isn't from the big metros.
It really highlights where the growth potential is outside the big cities. And this lines up perfectly with Jio's existing presence, doesn't it?
Ah, right.
Think about it. Reliance digital stores, there are over 5,000 of them, many right in those Tier 23 cities.
Mm-hmm.
Reliance petrol pumps, and just the sheer reach of the Jio mobile network, it's practically everywhere. Cities, towns, deep into many villages too. Jio's already there.
So the joint venture is basically, it's combining BlackRock's, let's say, financial firepower and tech with Jio's massive on-the-ground network.
Exactly.
And hitting exactly those areas where mutual fund investing is already taking off.
Precisely. It looks like a very strategic move. And the sources do confirm the JV has got the green light from SEBI, India's market regulator.
Okay, let's dive into that tech piece BlackRock brings. The sources keep mentioning Aladdin. What is that exactly? Why is it such a big deal?
Right, Aladdin. It stands for Asset Liability Derivative Investment Network. The sources describe it as this highly sophisticated platform based on AI.
Artificial intelligence.
Yeah. And what makes it potentially game-changing, according to the sources, is how it works. Unlike human fund managers, who, can sometimes be influenced by emotion or biases,
Agreed.
that kind of thing, Aladdin is designed to be purely data-driven.
So it takes the human emotion out of it.
That's the aim. remove the emotional factor from investment decisions. But it does a lot more. The sources really highlight its advanced risk analysis. It does it in real time.
Okay.
It's apparently designed to spot potential market disruptions. It can even try to predict things like, say, a pandemic COVID is mentioned or a war, and then immediately figure out the likely impact on the investment portfolios.
That sounds incredibly advanced, like a superpowered risk manager.
It seems to be. It can run complex simulations, stress tests, like what happens to your portfolio if interest rates jump up suddenly. It crunches huge amounts of data, economic data, market data, client data, constantly adjusting based on what's happening now.
And it learns.
Yes. And because it's AI, it learns continuously. Every market event, every crisis, a human might forget or take time to process the lesson. Aladdin supposedly remembers instantly and applies that learning next time. That makes it potentially very adaptive, very quick in volatile markets.
That level of analysis and, well, instant memory could be a massive edge. And who's actually running this JV?
The CEO they've appointed is Siddhartha Swaminathan. The sources note he's currently managing a huge chunk of assets at BlackRock, already something like $1.5 trillion AUM.
1.5 trillion.
Yeah. Putting someone with that kind of experience, managing that kind of scale, in charge from day one, it definitely signals they're serious about this.
Okay, so you connect BlackRock's tech, this Aladdin system, with Jio's incredible distribution. What does that mix mean for the actual potential in the Indian market, according to the sources?
Well, India's got this huge population, right? 145 crore people. But the sources say only about 24 crore are currently active mutual fund investors.
So a massive gap, huge untapped potential.
Enormous potential for growth, yeah.
And Jio's network seems perfectly placed to tap into that, especially in those smaller towns and rural areas we talked about.
Absolutely. The sources really stress how Jio's existing presence directly targets the very demographic that's already driving SIP growth, but where maybe financial products, beyond just, say, bank fixed deposits, haven't been as easy to access.
Right.
They've got the pipes, the infrastructure to potentially bring in millions more people who haven't touched mutual funds before.
How might they actually do that on the ground? Do the sources suggest any specific strategies?
Yeah, they float a few ideas. Leveraging the existing Reliance retail points is key. The digital stores, maybe even the petrol pumps or local geo centers.
Okay.
They talk about possibilities like training the staff already there to become mutual fund agents, or maybe even simpler things like just having QR codes at local shops so people can scan and open an account easily.
Simple tech-enabled access.
Exactly. And there's also the idea, which sounds very Geo, right, of potentially opening a mutual fund account to getting a discount on something else they sell, like your mobile plan or maybe even a fridge.
That definitely fits the pattern. Make it super easy, weave it into things people already do, maybe add a little sweetener. Okay, so let's bring this back home. For you, the listener, the potential investor, what are the biggest potential benefits for you if this JV really takes off, based on what the sources say?
The sources focus on two really big possibilities. First one, potentially lower costs.
Always good.
Right. Currently, mutual funds have costs. There's the expense ratio, that's a percentage taken out every year, could be up to maybe 2.5%, and sometimes exit loads, a fee if you take your money out early, given Jio's track record. Remember, telecom pricing. The sources speculate that this JV might come in really aggressively on costs, maybe much lower expense ratios, maybe even zero, or getting rid of exit loads altogether.
Wow, zero expense ratio. That would be disruptive.
It would certainly shake things up. More of your return stays as you return.
Okay, lower costs is huge. What's the other big potential benefit mentioned?
This one feels almost more revolutionary based on the analysis and the sources. Micro SIPs.
Micro SAs, so smaller investments.
Potentially much smaller. Right now, the minimum monthly SIP is often around $500. The sources kind of draw a parallel to older models, like how Sahara apparently used to collect tiny amounts, like one daily, and built up something big.
Okay.
They look at Jio's reach and suggest this could enable SIPs that are incredibly small. Maybe 100 a month, maybe €50, 25. The sources even speculate about amounts like 5 or 10, maybe daily, maybe monthly.
Investing just 5 or 10 rupees at a time?
Yeah.
That really would make investing accessible to almost anybody, wouldn't it? Even someone earning daily wages.
Exactly. That's the potential game changer. It could open the doors to a massive part of the population who maybe couldn't commit $500 a month, but could manage a tiny amount regularly. It could dramatically increase how many people are participating in the markets.
And the sources also suggest this wider participation could actually help people already invested too. How would that work?
Well, think about it. If millions more people start putting even small amounts into mutual funds regularly, that's a lot more money flowing into the market consistently.
Right, more demand.
More demand for the shares and other assets that these mutual funds hold. That increased demand could potentially push up the prices of those assets, which benefits everyone who already owns them through their funds. Sort of a rising tide lifting all boats scenario.
It definitely sounds like the sources see this as potentially very, very disruptive.
They certainly do. They explicitly use that word, disruptive, drawing parallels to Geo's past entries into markets. The idea isn't just that there'll be another player, it's that they might fundamentally change how things are done.
Through pricing, distribution, technology.
Exactly. Challenging the established companies, using that incredible reach in new ways, leveraging Aladdin for efficiency, maybe performance. The picture painted is one where, getting started with mutual funds could become almost as easy and normal as getting a new SIM card.
Okay, so stepping back, based on everything in these sources, this combination, BlackRock's global muscle and advanced tech, Geo's deep, wide Indian reach, it really does seem poised to potentially reshape the whole mutual fund landscape here.
It definitely opens up some exciting possibilities for investors, from potentially lower costs, meaning more of your money works for you, to this idea of almost anyone, anywhere being able to start investing tiny amounts through microsibs.
It really makes you think, if these two giants can potentially take something like mutual funds, which often felt complicated or out of reach for many, and make it accessible to nearly everyone across India using tech and distribution, well, what's next? What other financial products, or even completely different industries, might see a similar kind of transformation down the road? And how could shifting investment patterns on this scale impact the broader Indian economy long term? Definitely something fascinating to watch unfold.